Right now, as we watch the tape on this Tuesday morning, December 9, 2025, NVIDIA Corporation stock, ticker symbol NVDA, is trading live at $183.97. $183.97. We are currently seeing a decline of $1.61, or approximately 0.87%, to the downside in today's intraday session. The market is open, the data is flowing, and despite the headlines screaming about new approvals, the price action is telling us a much more complicated story than the surface-level optimism would suggest. Most investors woke up today expecting a massive green candle. The expectation was set high. President Trump just announced approval for H200 chip sales to China, ending months of regulatory purgatory. The narrative on social media and the Robinhood forums was clear. This is the floodgate opening, the moment where the Chinese revenue stream turns back on, and the stock should ostensibly be ripping toward new highs near that $212 52-week peak. That was the expectation. The reality, however, is staring us in the face with this red print. The reality is that the market is treating this news not as a victory, but as a sell the news event, likely due to the fine print attached to this deal, specifically the 25% revenue share the U.S. government is demanding on every chip sold. We need to look closely at why this disconnect is happening, because this is exactly where the smart capital separates itself from the retail crowd that simply reads the headline and hits the buy button on their Fidelity mobile app. When you analyze the price action we have seen in the first hour of trading, the volume is immense. Over 26 million shares traded in just the opening flush. This indicates that institutions are heavily active. They're using this liquidity event to trim exposure rather than add to it. The stock opened near $185.50, tried to push higher, and was immediately met with a wall of supply. This rejection at the $185 level is technically significant. It tells us that despite the fundamental catalyst of the China news, the technical bears are in control of the short-term trend. They are looking at that 45 times PE ratio and deciding that the risk-reward simply isn't there at these levels, especially with the 10-year Treasury yield hovering around 4.15%. Higher yields are kryptonite for high-valuation growth names, and even a giant like NVIDIA is not immune to the gravitational pull of the bond market. Let's unpack the specific catalyst driving today's volatility because it is arguably the most critical development in the semiconductor space in the last 2 years. The Trump administration's decision to allow the H200 chips to be sold to approved customers in China comes with a massive caveat. A 25% tax, essentially, that goes directly to the U.S. Treasury. While this theoretically reopens the Chinese market, it severely compresses margins. NVIDIA's gross margins have been the envy of the industry, hovering near 70%. If you slice a quarter of the revenue off the top for specific high-volume deals, that blend starts to look different. Furthermore, reports are surfacing that Beijing might restrict these purchases regardless of U.S. approval, creating a double bind where NVIDIA has permission to sell, but the customers might be barred from buying by their own government. This geopolitical tug-of-war is what is weighing on the price today. It creates uncertainty, and if there is one thing Wall Street hates more than bad news, it is uncertainty. You have to wonder how the average investor using Schwab Intelligent Portfolios or SoFi Invest is interpreting this. They see the approval headline and think the growth story is back on track without realizing the margin compression implications. This expectation mismatch is creating a curiosity loop where buyers are stepping in at $183 thinking it is a discount, while sellers are unloading supply because they foresee margin erosion in the next quarterly report. It's a classic battle between the headline narrative and the balance sheet reality. Comment below how many shares of NVIDIA you currently hold and what your average entry price is. Are you green on the position, or are you bag holding from the 200s? I want to see where the community stands on this. Looking broadly at the market, it is not just NVIDIA feeling the heat. Tesla stock is down nearly 0.8% today as well, and Apple stock is flat, struggling to find direction. The entire tech complex seems to be taking a breather. When you look at the flows in Fidelity ETFs that track semiconductors, we are seeing outflows this morning. This suggests that the risk-off sentiment is sector-wide, not just specific to NVIDIA. However, NVIDIA is the general of this army. If it falls, the rest of the soldiers tend to retreat. The correlation between NVIDIA and the broader NASDAQ 100 is tighter than ever, meaning this single stock's movement is effectively dictating the mood for millions of individual brokerage accounts across the country. Let's shift gears and talk about the company itself for those who might be new to the story. NVIDIA is not just a hardware company, it is the backbone of the modern artificial intelligence infrastructure. They designed graphics processing units, or GPUs, which were originally created to render video games, making the lighting and textures in your favorite titles look realistic. However, it turned out that the parallel processing architecture required to render pixels is also perfect for training neural networks. Today, their compute and networking segment is the bread and butter of the business. This includes their data center platforms, like the Hopper and Blackwell architectures, that power everything from ChatGPT to sovereign AI projects in nations around the globe. Their business model is fabless, meaning they design the chips but outsource the actual manufacturing to partners like TSMC in Taiwan. This allows them to focus purely on innovation and R&D without the massive capital expenditure of maintaining foundries. But the moat that NVIDIA has built isn't just the chips, it's the software. CUDA is their proprietary parallel computing platform, and it is the standard language for AI developers. This ecosystem lock-in is why competitors like AMD and Intel have struggled to catch up, even when their hardware specs look comparable on paper. When you use Interactive Brokers or Robinhood to buy NVIDIA, you're not just buying a chip maker, you're buying a monopoly on the operating system of the future. But monopolies attract scrutiny, and they attract competition. We know that major hyperscalers, Google, Amazon, Microsoft, are all designing their own custom silicon to reduce their reliance on NVIDIA. While that is a long-term threat, the reality today is that demand still outstrips supply. The backlog for Blackwell chips is reportedly extending well into 2026. This brings us back to the chart. We are currently sitting near the 50-day moving average. If the price breaks below $180, we could see a flush down to the $175 level, which was a previous consolidation zone. Conversely, if the bulls can reclaim $186, it would invalidate the bearish thesis for today and potentially set up a run back to $190. Traders using Fidelity Trading Platform or Interactive Brokers trading tools are likely watching the RSI, which is currently hovering in neutral territory, giving no clear signal of being overbought or oversold intraday. This neutrality is dangerous because it means the stock can move violently in either direction depending on the next piece of news or a sudden shift in volume. The macro environment is another layer we can't ignore. We are in a period where cash is yielding 5%. When you can get a risk-free return of 5% in a Fidelity Wealth Management account or a Robinhood Cash Management account, the bar for owning equities is higher. NVIDIA needs to prove it can continue to grow earnings at a rate that justifies its premium multiple. The forward PE is more reasonable than the trailing, but it relies on aggressive growth assumptions that get risky when you introduce geopolitical tariffs and trade wars. Let's talk about the retail behavior we are seeing. On investing sites and forums, there is a lot of chatter about the Blackwell Ultra chips and the upcoming Rubin architecture slated for 2026. Retail investors are obsessed with the roadmap. They believe that as long as the tech is superior, the stock will go up. But professional investors know that better tech doesn't always equal better stock performance if the valuation is already pricing in perfection. NVIDIA is priced for perfection. Any slip-up, any delay in the supply chain, or any regulatory hiccup, like the one we're digesting today regarding the 25% tax, causes disproportionate volatility. If you are investing online or looking for investment help, you have probably seen the robo-advisors like SoFi Robo-Advisor or Schwab Intelligent Portfolios automatically allocating heavily to NVIDIA because of its past momentum. This creates a self-reinforcing cycle on the way